Alright guys, this is Bank Nifty and H1 chart. So in this video, I'll show you exactly how we identify the key level. So that is the most important thing before you enter, because we never enter in anywhere. Alright, so we need a key level. So first, identify the key level. So how exactly I identify the key level? This is the big question. So basically I use support and resistance. Okay, support and resistance means a area where price was rejecting, or you can say this is shocking. All right, some shock are happening in that area. So let me explain what is the meaning of that. So means from this area price drops drastically. This means this is the shock are happening in the market. So later here you can see this is price goes up and price drop drastically. That means this is a shock. Okay, so means the price are rejecting from this area, or means someone want to hit in that area. That is called shocking. Okay, so I drawn some supporting line. So here you can see this is a H1 chart. So in that case, you can see price are running in a downtrend, clearly forming lower low, lower high, and the lower low, lower high, and the lower low. So here, when they are running in a direction, you can say like this is a direction, okay, downside. So I use three methods. That is, in every video I explain. First method, let me explain. Price are bouncing off or rejecting from breakout of structure. This is called breakout of structure. Price goes up, pull back, and break this area. So here breakout. All right. So this is called breakout, and price when pull back we hit in this area. So this is called breakout of structure. And another price goes up, pull back, goes up, again pull back near supply zone where exactly shock happened. So means here shock happened from in this area, right? So here you can see shock happened. All right. So once price pull back, we hit it again. Okay. So that is another method. So in that case, you can see this is they are forming a different pattern. So we'll explain later. Okay. Another price goes up, goes down, like they are holding. Price drop. All right. So that is the three way we enter in this market. And right now you can see price pull back, goes up, pull back, goes up, and a pull back again. So now we must find out the key level. So in that case, this is called breakout of structure. Here you can see they broke this structure and pull back, and it's a probability to pull back to this level. So if I see some rejection around 4, or let's say 50, okay, so I hit heavily in this area. Now question is that, can I enter here for the buy? Definitely. As an intraday trader, we will enter. We will discuss later when we will enter, when we enter here, when we enter before pullback, when we enter before pullback. This is called reversal trading strategy. So I'll explain later. Okay. So first understand how we trade during the trending market. All right. So this is the first rule, but this is H1 chart. Okay. So now see in a small time frame, like 15 minutes. Okay. Let's just jump to 15 minutes. Okay. Now you can see this is the 15 minutes, and I mark some area where price was rejecting. All right. So first here you can see that was price rejection, price drop again. Okay. Again break this structure, again price drop, and then now you can see we have seen some area in a small time frame, supply zone, that is called shock. All right. Supply zone or shock. So here in this area you can see this is also supply zone. Okay. Why this is a supply zone? Price was reject from this area. All right. So now you can see price drop and a pullback. All right. Again price drop. This is called shocking. So that is why I mark as a key level. All right. Remember, I mark as a key level means I'm just looking for short. Again price goes a little bit, again price drop. So another we have seen stocking. Okay, so stocking. Okay, this is called also supply zone. We need some rejection in this area. Okay, now let's jump to 5-minute chart. Okay, perfect. So here you can see this is the 5-minute chart. Now where is the rejection point? Okay, just a minute. That was also rejection point. Okay, and another rejection point was here in this area. Okay, in this area in a small time frame. So means this area also trigger point, trigger area, and another that was also trigger area. So price here you can see lower low, lower high, and the lower low, and price pull back because it is a sharp move up. That is why I am not interested to take position. Again pull back, goes little bit, fail to create new high, and we have seen some rejection, and we place order in this area. Let me show you. Okay, we place order here. Okay, basically I use 1:5.4, but today you can see last few days market here you can see this is a supporting line. That is why I place 1:3, but price not able to reach that area. Again price pull back. Okay, I add another position. Later I use 1:1.5 ratio. Okay, 1.5 ratio in this area. I book the profit. Now next, how we understand the market will reverse from this area or not? So in that case, we need two P's. All right, two P's. What is the meaning of that two P's? Let me explain. Just a wait. Okay, so let's say market is running a downtrend, creating lower low, lower high, and the lower low, lower high, and the lower low. But next, they're trying to create. So every lower low is one piece. Again, they form lower low. That is also one piece. Again, they form lower low. That is also one piece. Suppose next time price goes up, but fail to create lower low and goes a little bit higher. Means this is the two piece. All right. So once they break this neckline, that is our trigger point. We enter here in the opposite direction. This is the downtrend, but that is called reversal trend. All right. This is called counter trading, whatever you say. All right. So that is the breakout, and we enter here. Let me show you here where it happened. Okay. Let's see in a 15-minute time frame. Okay. Perfect. Now let me show you first the reversal from upside to downside. Okay, let me show you here. Just a minute. Okay, perfect. Okay. In that case, you can see price sharp move up, pull back. Again goes up. Price not able to create higher high. That was one piece. Now here opposite side, that is a two piece. Once they break this neckline, that was our selling point. Okay, perfect. All right. Now you can see another direction in this area. Okay, here you can see price clear downtrend, creating lower low, lower high, lower low, lower high, lower low, and goes up. This is also one piece. Now you can see this is also one piece. That is also one piece. There. Here you can see they form a two piece. Okay, let me remove here. This is one piece. Okay. Pull back, another one piece, goes up, pull back, not able to break, they form a two piece here. All right, but fail to break this level. So, all right, next price drop again form a one piece, price goes up, pull back, form a two piece in this area, and that is our entry point. All right, that is our entry point. That is the strategy we applied. All right. Okay, so what next entry point will be here? So in that case, we have seen that is a breakout of structure in a H1 chart, and price is probability to pull back. There are only probability. All right, there are no 100% charting. So if price break this supporting line, definitely I'll short it. So how I identify that it's going to continue to the downside. Let me show you in a 15-minute time frame. Okay, so this is the 15-minute time frame. Now, in a 15-minute time frame, you identify the market structure and market direction. So here you can see lower low, pullback, lower low, pullback, again form a little lower low. So still they are running in a downtrend. So in that case, I press break, and this is a supporting line. Now it's act as a resistance. I will wait for a pullback near 43850. So I'll see some rejection. If they form any rejection candle, I'll short it. All right, that is the rule. And another rule, how I identify the market will go up. Now you can see price goes up, pullback. All right, now you can see this is the piece number 1, this is the piece 2. Okay, so once they break this level, so I'll buy somewhere there. All right, that is the reversal trading strategy, or you can say counter trading strategy. So I hope you enjoyed this video. If you like this video, please like and subscribe, and thanks for giving a valuable time.